Good morning, this is Steffy and welcome back to another episode of The Financial Fox, Investing and Innovation Ideas with a Twist. Today I will be joined by MichaelWalters, investor and renowned financial journalist with over 40 years of experience, many as former deputy city editor and a resident share tipster on the Daily Mail. We are going to discuss about investment strategies, tips and warnings, how the stock market is doing, and how investors can identify opportunities and much more that you have to find out. But before we go into the episode, remember that I'm not a financial advisor and all the content here is for informational purposes only. Now, if you're not subscribed yet to the channel, make sure that you press the subscribe button and follow us on social media to stay up to date with our recent news and interviews. We have just released a new website, so you can check that out. Also subscribe there so you can get our monthly newsletter. So let's kick this off. Okay, Michael, it's great to have you on the show so we can talk about, investing, trading, opportunities on the market, which is a bit crazy. But before we go into that, would you like maybe to, give a little bit background and information about, yourself and how you ended up to focus on investment, identifying opportunities and helping investors as well?
I stumbled into financial journalism by accident, goodness knows, it must be 50 years ago now, and found it fascinating looking at the business of shares going up and down. And at various times I was city editor of a regional newspaper group where I instituted a share tipping column. I then moved on to the Daily Mail where from time to time, and when I felt the market was right, I did share tipping in addition to commentary on economics and companies and that. And along the way I wrote a number of successful books about investment. I had a bit of fun there. And all of the while, I've kept going with the investment theme, really. And as I left the Mail, I carried on my successful share tipping column there online, which is what I do now. I've become, inevitably, I'm a bit of a veteran, and I slog away. I look for opportunities. These days I find that I'm too lazy to look at the major shares. They are well covered by all of the broking houses, etc., etc. And I tend to look round for special situations, unashamedly more speculative ones, which some of them go badly wrong and some of them go very right. So, we have a little fun that way.
Exactly, we have a little bit of fun, but you are actually quite good in finding those unicorns, because this is where investors can, make 5, 6, 10 times their money, right?
It happens sometimes. I mean, the other side of this, which I really should emphasize, is that from ages ago, I was one of the first people in the UK, and we are talking decades ago now, to spend a lot of time talking about the stop loss. I mean, making money is great, getting it right is great, but in many ways the important thing is not to lose your stake. So I've always been a strong advocate of running a stop loss system. Stay with your share while it's going up, and set a stop loss, a point at which you'll sell that share if it falls by, say, 20% from the current price. As it goes up, you move that selling price higher and higher. That way, if it works in theory, you keep your losses to within 20% and you ride your gains.
Yeah, I think that's a very important point that many private investors, they probably overlook. But coming back to identifying those gems, what's your thought process there? Can you just walk us through how do you identify these opportunities?
Well, it's really a matter of instinct and gossip. You look around, and that really isn't the way you should do it. But there's an awful lot of online stuff now, sites you can look, find the shares that people are talking about, and you talk to your pals and see what they're interested in. It can be almost anything. These days, as I say, because I tend to fight shy of the big ones and go for the small ones, I look for the small ones where there's been a change of management, new people going in. They've obviously gone in with the hope of making money for themselves and everybody else. So that's obviously quite a good starting point. And then, of course, you go in for the various sectors of the market which are doing well. Right now, the one I like, and I have stumbled into it because it was something that I didn't follow very much in the past, but the hot section now is commodities. So many firms, companies which are specialized in these commodities, something like copper is going like a rocket at the moment. People think that that's going to carry on. That's offered a few opportunities. It's those basics which are there, One I've been following is Blue Jay Mining, which has got ilmenite, which is titanium, which goes into all sorts of things. And then I like a couple of these rare earth companies. And then, of course, we've still got a few special situations in the oil. I love the two companies which have stakes in West Newton, the oil discovery up near Humberside. There's Union Jack Oil there and Reabold there. They've both been a terrible disappointment so far, but we know that there is almost certainly one of the biggest onshore finds of oil ever in the UK there. And within the next few weeks, we really should have a good idea already of the extent of it, but that should really be confirmed with extra testing in the next few weeks. And if they're ever going to take off, that's the point at which these sort of stocks should take off.
One of the things is that maybe an investor has got, his own timeline and has got his own, time frame. And sometimes working with a small cap company, you need to be a little bit more flexible because something that you think can happen in 2 weeks because of permitting, because of license, because of different things, it can just stretch a little bit. So do you think in this case, being agile and being flexible is a good quality for a private investor to navigate the small cap market?
Well, obviously being flexible, that's part of it. And the stop loss actually forces you to be flexible if you really follow it. But, with so many of these companies, and we are, make no mistake, I'm talking here about the smaller, more speculative companies, the higher risk ones. But what does happen to these smaller companies when they get something good? Inevitably, they have to join up with one of the majors to exploit it fully, and that always takes so much longer than you expect. It drags on and on and on the process. And of course, in the case of several of them now, and particularly those boys at West Newton with the oil discovery there, it's been dogged by the coronavirus. That has helped delay so many researchers, so many parts of the project. They've had to hold back because it's much more difficult to operate in these restricted times.
Let's dig a little bit more into some of the aspects of analyzing a company. For example, what would you consider the biggest red flag where you will say, right, I'm not going to touch this company at all?
The biggest red flag of all for me is always the reputation of the people in it. Companies are made by the people who run them, and companies are brought down by the people who run them. And, there are certain guys that go around from company to company, bouncing away. They have a little spell there, and the price runs, and then something goes wrong, and they move on to the next one. So I think it's always been key to me to follow the people. You look at them, you find out as much as you can about the history of the directors. Successful guys, of course, they're not always successful, but guys who have success in one tend to move on and tend to have a following, which makes it a bit easier for them to get support to raise money, makes it a bit easier for them and the next time. So it's very much down to the reputation of the individuals. I place an awful lot of faith in that. And fortunately, I'm in the position where although, there are all of these rules and regulations about what people can say and whatnot, I've been around long enough that people tend to talk to me a little bit. If you can get to talk to these people and get a better impression of how they approach things, then that's an enormous help.
Yeah, definitely. So try to kind of research, but also try to engage wherever is possible with a company, you're basically saying. Okay, listen, if we look at like an investment portfolio now, so let's say, how do you make this portfolio balance? What would you say, right, you should keep 50% in commodities? I'm just saying something. How would you put together puzzle up a good and balanced portfolio now, considering the situation we are in?
Well, if you're going to put together a balanced portfolio, then you don't want to pay too much to some of the stocks that I'm looking at, because I'm looking mainly at the speculative ones, the ones that'll either make you quite a useful amount of money or will run into trouble. But, you can look around now, and I think there are prospects. There are companies like Tesco, which I think it's extraordinary that Tesco's on a 4% yield now. It's come out of a tricky patch, as inevitably any of these companies will after the coronavirus problems, but it's going to recover strongly, and it's doing very nicely. So you want some solid, pick some of the boys from the top 250 companies that are recovering, and add a little, but well, you should actually, if I'm absolutely sensible about it, you should only have 10, 20% of your money in the nasty little speculative ones that I like. And you should stick to the FTSE 250 companies, the solid companies. There are others that I like there that are in quite respectable areas. There's a company called Supermarket Income REIT, which I rather like, which is buying the freeholds of supermarkets which are owned and operated, it's buying the freeholds of them, and they're operated by people like Tesco and Morrison's and whatnot. So there's a very strong covenant there. The shares yield over 5%. That's solid. As another safe one I've liked for years is Primary Health Properties, which buys doctors and develops doctors' surgeries. Now, the rents on those are covered 100% by the government. So this is absolutely safe, and you've got a 4% yield there. They're gradually expanding, and it goes on chugging along year after year, getting a bit bigger, getting a bit more solid. So those have a good proportion of safe stocks like that in there, and have a few of the smaller, more speculative ones as well.
How do you see the banks at the moment, companies such as Barclays, Lloyds, which have been recovering quite well actually since, beginning of last year when COVID, break out? How do you see that they are going to perform going forward?
They're all going to have a bit of a surge, and there could be a surge in the share prices in the next few months, and we'll talk, but you look at Warren Buffett, the great American investor, who the last few days has been warning people about, he sees the return of inflation in America, and that's very much so. American companies are going to get back, and they're going to be back before the end of this year, at the point they were before the coronavirus crisis arose. But they're not going to be the same. All of these companies will have a void. There'll be a big recovery, but it's going to be difficult. I think we're going to have a surge, and then reality is going to return. People are going to look and say, okay, we've had the surge, we've had the recovery, where do we go next? And where we go next is, I think, in company terms, solid slog. They've got to get down and slog away, getting back into the business. And there's no doubt that business is going to be more difficult in many sectors than it was before. People are going to rush out to restaurants now, and that's going to be great. But after that initial flurry, they're going to find that, it's not so good. There are going to be more people out of work than there were before. There's already been a lot of pressure on earnings among the people who are in employment. So we're going to have a good spell, but it may not last.
Yeah, but I mean, in America as well, they are talking a lot about the stock market bubble and how, we could, towards the end of the year, we could see the things completely change. And as you said, coming back to reality, where perhaps, maybe commodities, as you mentioned, the sugar, coffee, wheat, they're going to become, much more valuable than what they are now, because this is the fundamental that people really need.
Well, those commodities, yeah, they may be the consumables, but the ones I really like are the ones that are going into industry as people are rebuilding the infrastructure. And we've got a major change going on now as we've switched from the petrol engines to electric engines and all sorts of other stuff. And there's a major change there coming, and that's going to step up the demand for copper massively. The copper price is already pushing up towards new highs. It's just gone to a recent high, and it will carrying on going. I mean, copper's essential to so many things, and there's going to be a massive demand for it. It's been cyclical in the past. It's been up and it's been down. But in fact, now copper is in demand for so much of the new technology, the technology that's electric driven. It's going into wind turbines and it's going into electric cars. They're consumers of so many of these things. And there's rare earths. I like rare earths as well. There's great booming consumption of them too.
So Michael, just back to the copper. Do you have any companies that you like in particular? I don't mind if you mention any kind of small one. Doesn't matter.
This runs through the sector. Any company that's substantial in copper is going to do well, and there are the mining giants there. But as ever, I'm looking for the small players, the little ones that will have a disproportionate benefit if they get it right. There's one I rather like called Chesterfield Resources, which is a very small company. I don't know. It's probably capitalized at only about £20 million. Now, that has started mining and prospecting in Cyprus. Cyprus was, in the old days, a massive producer of copper. I think actually Cyprus, if you trace it back through the Latin and whatnot, actually there's a link to the word copper. But it's got massive copper prospects there. It all stopped in 1974 with the Turkish invasion of Cyprus, and nobody had been mining copper for years and years until about 2 or 3 years ago. Some companies started opening up the mines and looking again now. Chesterfield is one of the ones that's doing that there. And as an added bonus, last year, a giant Russian metals company bought 20% of the stock. Now, it's not going to sit there and do nothing. It's going to go on and up, and it's been boosted by the copper price as well. So I think that's got a double whammy there. It's quite a small speculative one, but it's one that could pay off very well.
Okay, that's a good tip. Talking about rare earth, do you have anyone that we should look at?
Well, I've got one favorite that I've been writing a lot about called rainbow rare earths. This is extraordinary, and I still find it hard to believe. There are only 3 actual producing rare earth companies outside China at the moment. It's astonishing. There are loads of rare earth companies. Rare earths are very common, but very few can get them in quantity, and they all have to go to China to be treated en route. There's a company in Australia, a major company in America, and there's this tiny little one called Rainbow, which is in Burundi in Africa. It's just, as you might expect, hit a little bit of trouble there with the locals. I think there's probably some dispute over whether they're paying sufficient taxes there. It's a very small rare earth producer there at the moment, but it's also got, and this is what I like about it, these speculative ones that I like have always got something extra. This has got deposits in South Africa of gypsum. Now, gypsum has got nothing basically to do with all this, except that these gypsum deposits do contain rare earths. They contain them in very small quantities, But when you get them there, they add up and they mean a lot of money. And this means that the rare earths, because of the gypsum process, have already been partly treated, and they could be worth literally billions of dollars. They've got a production plan in process, which means that for 17 years they'll be able to produce this at a rate which will generate for them, again, turnover of billions of dollars. It's not quite there yet, but they're working hard on it. And in the next 18 months or so, I think they're going to be in production with that, and they will be a major player in a sector where there's a real scarcity of people producing rare earths at the moment. A lot of people have got plans to do that, but they ain't there yet. And this is one of the few that, as I say, in Burundi, it's producing in a small way, and in South Africa, it's got these gypsum stacks, which means it will be producing in a more meaningful way within 18 months or so. So that, again, this is a gamble. These are the sort of little things I like. If they come off, you've got a company here which is valued in the market now at under 100 million, which could be earning that much a year, over 100 million a year, if this comes right.
Yeah, wow. Listen, uranium, are you a fan of uranium right now, or you think...
Oh, no, I don't know much about uranium. All I know is that it's a very difficult sector. There's a company that I used to look at in Greenland Minerals, in fact, and that found uranium, was going ahead to produce uranium in Greenland. And in fact, the locals in Greenland, they've just had another election there, and they voted in a group which will stop it producing uranium in Greenland. Nobody likes uranium. It's a dirty thing to produce, all sorts of question marks over it. But I don't know about the major uranium producers at all.
Okay, so let's move a little bit into precious metals and maybe talk about gold and silver. Considering, the market volatility, government keep printing money, inflation coming, are we still seeing gold as a safe haven asset and obviously an asset that can go up in value?
I haven't really got any view about that. The gold sector is a very specialized sector. You've really got to know a lot about it. I haven't chanced upon a gold company that I like. It's not a subject I could really address.
Okay, what about silver?
Silver the same. Silver, I know even less about silver, I'm afraid.
Okay, so you're basically saying that it's important for investors to just stick to what they are interested in, they are good at, the sector they like, rather than just try to explore or, go into sector they really don't understand or they don't have much information about.
Yeah, I think this was Jim Slater, the ace investor, who's unfortunately dead now. He had this thing, you could become an absolute expert in one sector, in one area, and you could do that. And if you pick these companies that are doing something in particular and you study it up and you get to know about it. I mean, there's another little one that's caught my eye recently called Woodbois. It's a little bit difficult to pronounce, actually. Now, that's a timber company.
The ticker?
The ticker is WBI. Okay. Now, timber is another of these basic commodities that's in a bull market at the moment. Prices are soaring, and that's no surprise. And this little company, well, it's not so little. There is no big quoted company specializing in producing wood around the world. This company has got ambitions to do that. It's got a couple of concessions in Africa where it's producing hardwoods and it's developing the production of veneers and whatnot, which are higher margin and whatnot. And again, this is what I like about these companies. Alongside that basic business, it's got a little kicker, something extra, which could really add to the fun. And this is diversifying. It's about to start marketing carbon credits. You can get, and carbon credits are a big business now. companies which are producing all sorts of dirty air and whatnot need to buy carbon credits. And what better for producing carbon credits than forestry? So Woodbois can generate carbon credits, and it can sell them alongside its timber, and it's just about to start doing that. Nobody knows about it much. Nobody follows the timber industry. You can't buy into the quote timber industry much because there aren't such companies. But this is one company that's there. This again is another little specialist sector company that if you look into it and you can start learning about it, you can become quite a little specialist and get ahead of the market generally.
Okay, Michael, that was great. Listen, the last things that I'm going to ask you, I'm not sure what is going to be your take on that, but I really wanted to ask cryptocurrency. I'm sure that you have been following what has been happening with Bitcoin and, all the Ethereum and all the other things.
Yeah.
What's your comment here?
I'm one of the traditionalists. I don't trust Bitcoin. I have an extremely bright son who lives in the States, who, without consulting me about it, has been playing about in the investment world. And maybe 2 years ago, suddenly he was into Bitcoin, and he was telling me about Bitcoin this and Bitcoin that, and he was making quite a lot of money in Bitcoin. And then suddenly it all went wrong. That was the first coming of Bitcoin. It went up and it went down, and everybody got bruised. Since then, the last year, 18 months, it's been going ahead, and it's now at new heights. Although it's very volatile, if you don't catch it you look from day to day, and you'll find there's been a 10 or 20% fluctuation on 1 or 2 days, and there are some who believe in it, some very important people who back it. For me, I'm with the traditionalists who don't understand it, don't like it. It's a thoroughly manufactured product, a manufactured speculative product. Some people will do very nicely from it. I don't see it being long-term a replacement currency, but I may be completely wrong, but it's not for me. There is one stock in the market which is attracting a lot of attention playing it, and to be quite honest, I look at it and I can't even remember the name of it now, but I know a number of people on my bulletin board love it, and I just shudder whenever I see it. But good luck to them. They're doing well at the moment, and long may it continue, but I don't think it will.
I think, as you said, it's something that you have to understand. You have to, you can't, because it's very volatile, and I think it's something that you need to follow up, very, how can I say, very closely. So it's not for everybody, and as we said, it's quite volatile, all the crypto space. If we want to send people to your website or somewhere where they can, get to know that you are investing, where they can go, Michael?
Well, that's very kind. They can reach my site at www.michaelwalters.com. And if they look on the front page there, they'll find in the column on the right, there are samples freely available to all of previous recommendations, so they can get an idea of the style of it. It's only £75 a year, and it keeps an old man happy.
So listen, Michael, what do they get with the annual membership?
It runs every day. I post on it usually 2 or 3 times a week, but there's no commitment. There are odd weeks when I go without writing anything, odd weeks when I may write 4 or 5 things in a week. There's that there. All of the time, there is a bulletin board to which all subscribers can and do contribute. We've got an extremely good intelligent bunch of subscribers who post their ideas on there. Some of them are really good. And when I tell you, as I have done earlier, that I don't look at the standard traditional stocks, the more conventional stocks myself very much, there are some on there who are absolutely ace at that. And they use my bulletin board to post their opinions on the safe and solid stocks, and they do very well. They do very well indeed. And I monitor this board, and I recommend what I think are the best posts, and everybody behaves. Nobody is nasty to anybody else, and it's all sensible stuff. Bulletin boards, investment bulletin boards, are a wonderful source of information, but unfortunately, too many of them are dominated by foolish people who post nonsense. That doesn't happen on my side, and I'm immensely proud that I've got a group of subscribers there who are sensible and intelligent and work properly.
Okay, Michael, that's brilliant. Thank you so much for coming on the show and sharing those amazing insights. Right, this was a great interview with MichaelWalters. He gave us some great tips as well. I was, been having a look at the company you mentioned, which I've already been doing quite well since 2020. And I think the point about, looking for opportunities, special situation, it is interesting. Obviously, it depends on your risk profile, how much money, you can put in small cap stock rather than, in companies that are a little bit bigger, they are a little bit safer. But I think one of the biggest takeaway is just really trade and invest where you know. So there is the point about do your own research, which is very important, but also stay within the sector, stay within the space that you understand. So if you don't understand gold or silver, or you haven't followed that, or just leave it, because you can make some really good returns just sticking to what you are good at. And I think this is a point that many investors, they don't look at. They just say, right, I want to make money in, let's say, rare earth, because now rare earth is fancy, but they never been following that sector. And I think this is a big mistake. And so stick what you're good at, do your own research, and obviously follow the company that you believe has got potential. And I found it quite interesting that he said, I follow the people, because when you are looking at a company, I've been involved in different kind of corporate situation where you have investors, they said, we look at the assets, we look at the management team, or someone else just look at the financials, where actually here you have somebody that is telling you, look at the management team, because those people, if they've got a track record of success, they're going to succeed again. So, hopefully, obviously. So look at the people is something very, very important. And I think particularly in the small cap space, you are not investing in the project or in the product, even as much as good it can be. You are investing in the people, because it's a small cap company being able to manage whatever project they have got. And I think that's very important, because they are going to be driving everything. So there was another great takeaways. He's not really keen on crypto, but I do understand that it's not for everybody, and it does require a lot of study, experience, and skilling up, and all stuff that not everybody is keen to do and prefers to focus on something else. So I kind of understand that is not for everybody, but that might not be what I think, but that doesn't really matter. It's good to see what other people think. And I think Michael was brilliant. He gave us some amazing tips. He has got a track record of success. He wrote some really interesting book. And also, it seems he has got a quite successful website as well, with people, proper people. Obviously, they are paying an annual fee, but they are coming, they are contributing. So talking to your friends, to your mates about what can be a good investment. And I think talking is a way to analyzing it, because when you're doing research yourself, you are kind of like, looking at things from your point of view only. And sometimes that can be tricky, because if somebody else was going to make a point and say, right, look at this, why that is happening? Why can this company scale? And I think sometimes you get to analyze a company better or a project better if there is teamwork or you have somebody interacting with that. And that's what the bulletin boards can do. This is what the private investor meetups can do. That's why I've always been a strong ambassador about gathering together, talking, networking, even with the company. Try to engage with the company in a way that there can be a dialogue, because information can give you an edge, but you need to be keen to exchange what you think and listen. Listen is something important that nowadays people don't do. They always think they are right on something, but listen is a special skills that can get you an edge. So this is everything from the Financial Fox today, and I really hope that you enjoyed this chat. It was awesome, and we learned a lot. And I will see you next time.